RHB Research believes the worst is over for Genting Malaysia, as the group's current valuation is attractive to position for a cyclical recovery. RHB analyst Lu Tongwai said in a note today there was a significant improvement in visitor arrivals during a recent visit to Resorts World Genting. This reaffirms the research house's positive view on the pace of recovery post-reopening. With international borders still closed, Lu said Resorts World Genting will benefit from domestic tourism. And with the gradual relaxation of social distancing rules and the potential discovery of a vaccine, he says the pace of recovery will further accelerate. Lu believes the group has reached its inflection point, where almost all of its facilities have reopened, boosted by an encouraging business recovery. He also pointed out that the stock is still trading at a trough valuation of 5.5 times FY21 EV/EBITDA, a more than 50% discount to its regional peer average of 12 times. Plus, its generous dividends will serve to support its share price and continue to reflect its sturdy balance sheet. The research house maintains its buy call for the group, with a target price of RM2.59, which is a 20% upside to its last closing price of RM2.15. Axiata Group says Sri Jamaludin Ibrahim will be retiring as chairman of Celcom Axiata on October 15th. He will be succeeded by Datuk Izzaddin Idris, who is currently the Executive Director/Deputy Group CEO and Group CEO Designate of Axiata and the Director of the Board of Celcom Axiata. Axiata says this transition is a decisive step forward and part of the bigger plan in the smooth and seamless leadership succession plan at the group. Jamaludin, who had his contract that expired on March 2nd extended till year-end, will continue his role as President and Group CEO of Axiata until end December. He has helmed Celcom Axiata for over 12 years, having held the position of chairman since the demerger of Celcom and Telecom Malaysia International from Telecom Malaysia in 2008. The Ministry of Science, Technology and Innovation, MOSTI, says Malaysia is collaborating with Russia on the development of the COVID-19 vaccine. According to Bernama, one of MOSTI's agencies, the National Institutes of Biotechnology Malaysia, signed a letter of intent with the Russian embassy to obtain further information on the Sputnik 5. Its Deputy Minister Ahmad Amzad Hashim reportedly said the Russian Direct Investment Fund had acquired the exclusive rights to supply Sputnik 5 to the world. The Bernama report said the said vaccine is developed by the Gamaleya National Research Centre of Epidemiology and Microbiology, the agency that also developed the vaccine for the Middle East Respiratory Syndrome or MERS. Ahmad Amzad was quoted as saying that Phase 3 of the Sputnik 5 clinical test is expected to involve participants across the world, and further talks on the vaccine will be held with the Russian embassy in Malaysia soon. Meanwhile, a letter of intent was also reportedly inked with the Cuban embassy in Malaysia on collaborating with the Finlay Vaccine Institute and Centre for Genetic Engineering and Biotechnology, Cuba, to gain access to the vaccine being developed there. The property market's performance, as measured by the volume and value of transactions, fell in the first half of 2020 in line with the country's economic contraction and is highly likely to remain sluggish for the rest of the year. Deputy Finance Minister Tu Muhammad Shah Abdullah reportedly said that the number of transactions fell 28% to 115,000 units from 160,165 units in the same period last year, while the value shrank 32% to 47 billion ringgit from 68.5 billion previously. According to Bernama, Muhammad Shah said the residential subsector drove the market, accounting for over 65% of total transactions. Meanwhile, the residential property overhang situation worsened to nearly 32,000 units, valued at 20 billion ringgit. That's up 3% from the number of overhang units as at end 2019. The primary residential property market was also affected, with new residential properties launched totaling only about 13,000 units and sales being weak at below 5%. Mercedes-Benz Malaysia has seen vehicle sales stage a firm recovery, with demand stronger than pre-COVID-19 levels for the last 3 months following the pandemic-induced disruption. President and Chief Executive Officer Klaus Weidner says he is positive on the recovery of the demand for its cars, supported by the sales tax exemptions from June 15th until the end of this year. According to Weidner, demand in the last 3 months is higher compared with the beginning of this year as well as the period at the end of last year. He hopes to see this uptick continue till year-end, though that will also depend on several factors, such as the economic situation and customer sentiment. Being in the higher price segment also gives Mercedes-Benz Malaysia certain benefits, he says, citing the economic feasibility from its customers.